back. Shares of Bombardier, as you see, higher by 7%. They've been there all trading day. This came after the Wall Street Journal this morning reported that Donald Trump plans to further evaluate the tariff question before imposing tariffs on Canada and other trading partners of the U.S. We're joined now by Bloomberg's Stephanie Hughes for more. Dramatic reaction, Stephanie, in the shares of a company that does a lot of its manufacturing here in Canada and sells a lot of its product in the United States, Bombardier.
Yeah, absolutely, Paul. So shares actually gained by as much as 10% today, which was the biggest intraday jump since May, and put it on top of the TSX best performers list for pretty much the entire trading day today. And like you alluded to, this came from media reports, initially from the Wall Street Journal and then other reports after it, that U.S. President Donald Trump was circulating an internal memo to federal agencies to really re-examine these trade relationships, particularly with China, Mexico, and Canada. But more importantly, that really delayed the imposition of tariffs so beyond the first day in office. So Bombardier, a private jet manufacturer with a really complex supply chain that has facilities in Canada and Mexico, is so far being spared from these tariffs, at least for now. So other manufacturing peers like Skidoo maker BRP and auto parts manufacturers like Magna and Linamar were also gaining a little bit today. Going back to last week, National Bank analyst team had a note saying that despite this looming tariff threat, they were still quite bullish on Bombardier there. And their hope was really that reason would prevail, in their words, and that the aerospace sector would be exempt from tariffs. So we'll just have to keep an eye out to see what these tariffs ultimately end up looking like, Paul.
Speaking of tariff risk and the economic consequences of a tariff war, you had a story out this morning about David Rosenberg, the very prominent Canadian economist, warning that a tariff response from Ottawa could be actually more damaging to this country's economy than the economy of the U.S. Can you tell us about that?
Of course, yeah. So really interesting commentary coming from David Rosenberg. Like you mentioned, he's a prominent economist that's regular on your channel there. Basically, he was saying that the Canadian government's sort of tit-for-tat counter-tariff plan against these tariff threats really would be worse for Canada as a whole than they would be for the U.S. And that's because Canada exports more than 20% of its GDP to the U.S. By contrast, the U.S. only exports about 1.2% to Canada. So there's really an economically imbalanced trade relationship there. In a note this morning, Rosenberg Research said there are times when it pays to just take your lumps and move along, since a full-blown trade war would leave Canadians worse off. So the report today that we've got a little bit of delay on the tariffs there does buy us a bit more time, but we'll have to see what ends up coming out of those tariffs and what Ottawa's response is, Paul.
Stephanie Hughes, thanks as always, Stephanie. She's with Bloomberg News in downtown Toronto.